Hello, everyone. My name is Jane Feng. I'm a real estate investor and a real estate broker specialized in residential investments and commercial real estate. Today, the topic that we are going to talk about is, should we incorporate or not when we are trying to buy a investment property? So this is a question that I hear so often. Everybody is asking this question as a first-time investor. I completely understand because I was debating that like many years ago as well when I was investing in my first property. And I'll tell you my decision back then and what I think about the decision back then, now that I have so many more years of experience. Before we start, I like to have a disclaimer. This is just my personal opinion and experiences. It is not legal advice or accounting advice. Please consult your lawyer and accountant for any legal and accounting advices, and any numbers I use in this presentation are only for demonstration purposes. If you like to buy and sell your investment property or commercial real estate, please give me a call. My phone number is 647-872-0238. My email is jc8fung@gmail.com, and my website is www.janefeng.ca. If you like the channel, and please subscribe and like the video in YouTube. I would really appreciate it. So the question today is, should I own my investment property using an incorporation or under my personal name? Or someone else might ask, should we do a bare trust? So the question is, if you're buying a rental properties or an investment property, what should you do? Should you have the title under your own name? Or should you start a Canadian corporation and put it under the corporation name? There are multiple factors that we need to look at. Let's take a look at the owning property using personal name. If you have a rental properties, you could, just directly have your own name transferred to it. First of all, if you use your personal name to own a rental property, your mortgage is typically a little bit lower interest rate than a commercially owned property. You may be able to get mortgage easier if you don't own too many of them. There are certain limits for different banks of how many properties can be under your name, because it will affect your credit score. Whenever the bank pull up the credit score, they can see all the properties that you own under your name, and it might affect your overall credit and liability level. And some bank would allows you to own, say, 4 properties. Some may go to 6, some may even go to 10 or 13. So different banks or credit union, they have different rules. From an accounting perspective, owning it under your personal name would be a lot cheaper from accounting perspective, because the accounting is easier to do. You can still deduct any expenses that you have with the property against the earning from the properties or the rent income from it. And if the properties have any losses or capital loss or any other losses, you can claim it against personal income as well. From a liability perspective, you are protected by insurance. So if anybody, or if anything happened to the house, your property insurance have protection. It also typically have liability protection inside your property insurance as well, but you should talk to your insurance broker just to make sure. If there are really situations that you get sued, for any reason, it is under your personal liability. So meaning that someone can sue you personally. However, you should be well protected by your property insurance. And if you're owning a corporation, owning a properties using a corporation, typically you might get a high interest rate if you are, if the property is considered as a commercially owned property, because you are using a corporation. So we might be going to a different department for getting mortgage. So depending the size of your property, you may still be able to get a regular residential mortgage. Um, However, you probably will be using a personal guarantee to do that. If you don't want to use personal guarantee and going through purely as a commercial mortgage, then in that sense, you would have to have really strong financial statement for your corporation. You need to have all the lease agreements, and the property would need to be fully leased out. And most likely they will still ask you for personal guarantee, even though you're going through a commercial mortgage. And if we are owning the property using corporation and going through a commercial mortgage, there's something which is called the annual financial statement review, which a lot of banks charge you money, ranging from $1,000 to $3,000 just to review your financial statement for you so that they can continue to lend money to you, which I personally think is, I would prefer not to pay that yearly. However, that's just how it works. If you're owning a small residential house, and even through a corporation, it is still possible that you can go for a regular residential mortgage. Okay, so you can still enjoy the lower interest rate, the easier handling of the mortgage without the annual financial statement review. So it really depends on the situation. The second thing about the owning a property using corporation is accounting. For those people like me who are unable to do accounting on myself, I have to outsource this to an accountant. And it turns out that if I have a corporation, the accounting fee is a lot more expensive than doing a personal tax. So this is for personal tax and bookkeeping. So from my experience, many cases that accountant do charge us more fee because it is a corporation. We can still deduct expenses within the corporation for the rental properties. You may be able to deduct a little bit more expenses, but you have to talk to your accounting. The profit and loss of the property do stay within the corporation. So you would have to think about how you can get the money out once you sell the property, because, the property after it is being sold would be inside the corporation. So how do you get the profits out back to your own personal bank account would be something that you should discuss with your accountant. From a legal perspective, if you have a property only under corporation, you are still protected under the property insurance. You're shielded from liability because now the corporation is the owner of the property. So if someone needs to sue the corporation, they will sue the corporation and not you, unless you are, the director who is not doing your due diligence or, doing fraud. Then that will be another situation. Another thing that you may realize that creating a corporation has a fee to it. When I started at the very beginning, I didn't know a lot about corporations. And I was talking to my accountant. She was telling me that she could create a corporation for you. And back then was a long time already, like maybe 10 years ago. And her fee was $3,000 to create a corporation. I get a corporation stamp. I get this like really nice plastic binder for my minute book, supposedly. And I got this like, really like a lot of cool stuff from that $3,000. So I created a corporation using my accountant. And now, fast forward 10 years later, I realized that whatever she did, maybe I didn't have a very good accountant back then, was just something very generic. It was, nothing more than, a default or generic article of incorporation that she put in. And another option is you could hire a lawyer. A lawyer for sure is going to do a much better job than, for sure they have, the experience for creating the bylaws and everything, the article of incorporation. So you're going to have a really good service from a lawyer. However, the legal fee would be ranging from 3,000 to 6,000 or even 8,000-9,000, depending on which lawyer you are hiring. And from my perspective, after owning a number of corporations and having the corporation own properties, I realized that it may not be necessary to hire an accountant or legal lawyers to create a corporation, because there are a lot of websites that can help you create corporation, although the article of incorporation is a bit generic, but then from owning a investment property perspective, it might be good enough for now. And if you're in doubt, you can always give me a call. I can give you some tips on, what you need to change in the article of incorporations when you are incorporating using those cheaper software to do the incorporation. But in general sense, I feel that that is already enough because we are not, running a gigantic operating company. All we are doing is having a holding company owning a property, which a more standard corporation is already good enough to do that. I probably later will be creating a guide for it. So throughout the times, I have owned property using my personal name, and I have owned property using incorporation. I think in a nutshell, this is what I would tell my older self, back 10 years ago. First, just use a website to create a corporation. I save, at least $3,000-$4,000 just because of that. And get someone, who has done the corporation before and ask them for any tips for the article of incorporation so that you are not using the, empty version or the default version, which the default version is not too bad. And secondly, if I would have to choose again, I probably will go by this rule, which is what I'm going by these days, is if I'm buying a small residential properties, I would either own them through my personal name, or I might have one single corporation to own the little residential houses. And for a larger rental property, I will create a brand new corporation to own the larger rental property just because of liability reasons and just because of separation of concerns and easier for accounting. And so this is what I have been doing the model, which is the smaller houses. I either own it personally or I own it for one single corporation because, every single corporation has yearly costs, right? They're not cheap to have. So having one tiny property per corporation, I think that's a bit overkill. Just the accounting expense and the legal and the operating cost to maintain that corporation would have eaten into my profits. So, but then for the larger rental property, because of liability reasons, because they have more things to handle, so I think it makes sense to have a single corporation to own a large rental properties. So this is my experience, and I hope that you enjoyed the video. And if you have any comments, feel free to contact me or leave some comments on YouTube. And thank you so much for your time. And this is my contact information. I hope that I will see you again and speak with you live on the phone or in person. Thank you so much.